Let's just touch on the points when it comes to the shilling. It seems that Kenya has consumed the entire $144 million that it received from the IMF to try and ensure that the shilling does not depreciate. News out that MPs are calling for the resignation of the current finance minister. What is your sense with regards to the depreciation of the shilling? Because we have seen it strengthening over the last few months. There's fear that it's going to weaken from these levels onwards.
I think it will still hold where it is for the moment, but as we've been saying, we expect it may begin to weaken as we move towards the end of the second quarter of 2012. And as to the central bank governor's resignation, I think that's more of politics, but I don't think we didn't see much of a reaction from the market, and I don't think going forward we'll actually see much of a reaction. The MPC is the one that sets the policy. And the governor, of course, is a member of the MPC, but it's made up of quite, a lot more people. So I don't expect such a strong reaction from the market based on that news.
When we saw the shilling trading at above 107 to the US dollar, of course, there was a lot of fear in the market. We're sitting at just below 83 shillings to the US dollar. What kind of average shilling are you expecting going forward this year? Because we've got a slightly better inflation environment that we're anticipating, and we still have very high interest rates. So that should naturally actually start feeding through into the shilling's performance.
Going forward, for the next, the remaining part of the financial year, 2011-2012, we expect the shilling to hold around levels of probably between 85, let's say 85, let's say an average of about 85 shillings. But in the second half of the year, it's a bit difficult to tell, because there will be a new budget. The government, there will also be quite a number of changes in government and government structure. So it's a bit unclear in the second half, but for the first half, we're expected to hold at an average of about 85 shillings.
Well, let's also touch on the fixed income market. Across the yield curve, we actually see a lot of unmet demand. It seems that investors are starting to cash in some of the returns in the short term. Are we starting to see demand picking up, at least at the longer end of the curve?
There's demand actually across the whole curve, 3, 5, 15, 20 years. A lot of latent demand and also a lot of demand on the board, which is not being met. And CBK is also staying at the short end of the yield curve. They're issuing a one-year bond next week, which we expect to come in at levels between probably 1850 and 1950. And a lot of this demand will actually still remain as long as people believe that rates are coming off for the first half of the year, where people feel pretty sure that they are. There's always the threat of inflation. As we've seen yesterday, the electricity distribution company increased the price of electricity by a few points. But and the weather is also not quite favorable to in Kenya, and our economy is actually based a lot on agriculture, and also electricity generation is through hydro. So going forward, there's the threat of inflation on rates, but we expect that most of the market is looking at rates coming off. So there will remain a lot of demand, especially at the short end, as investors look to lock in returns.
Yeah. You mentioned electricity prices, and given the fact that we are anticipating an increase there, what kind of impact do you think it's going to have on inflation? Because it seems base case scenario still is that inflation should start coming lower, given the fact that now policymakers are starting to press the banks to try and drop interest rates to assist the middle class.
In terms of the electricity increase we saw yesterday, I think this will be netted off by the decrease in fuel prices that we've seen today. And also in terms of giving a deadline to the MPC by which time they should reduce rates, I don't think this is very realistic, as there are a lot bigger factors at play here, that some which are beyond their control. So yes, there is quite a bit of pressure on them to bring rates off, but I expect the CBR to be held where it is until it's quite clear that inflation is heading in a certain way.